There is an NFL lockout. Players stand to lose millions of dollars. Ed Butowsky advises athletes on how to manage their money. He's here with the company right now in New York. I can't believe there'll be a lockout. I can't believe you will close down the most lucrative sport in America. What say you?
I don't think it's going to happen either. In fact, I actually think today we'll probably have a resolution to this.
Really?
There's too many reasons for this for a lockout not to occur. All right, so there's too many reasons, but I will tell you, I think they've kind of coined this as billionaires versus millionaires, and in this particular case, you have to remember that the millionaires, meaning the football players, they're a perishable item. If you really want to think about it, they have a short lifespan in terms of their profession. So these people who are doing the negotiation right now, these guys need their checks.
Yeah. So the players don't have that much leverage, because if there is a lockout,
that's right,
they don't get paid.
They don't get paid, and I'll also tell you this: if you take the top 5 wage earners in the NFL, take them out of this, 91% of these players are in some sort of financial distress 5 years after they finish playing. These guys,
wait a second,
absolutely,
I've got to repeat that.
That's their own.
Well, let's talk about whose fault. All right, I think the fault lies in the people who are advising them. Guys like me, their agents, all the other people around them.
That's still their own fault. You know why?
Yeah, because these guys trying for years to.
Not only that, though, these guys, if a reasonable money manager approaches them and says, "Listen, let me help you out," and they say, "What can you do for me?" I think if we're really handling the money right, I could bring you 10-15% a year. Oh, yeah. Well, some guy promised me 100% a month. These guys are unreasonable, unrealistic, and that's why they get taken by the con artists.
But by the way, I've been involved with a couple of them very recently that the headline will be out at some point soon that are awful. One player, got taken for $40 million, played 15 years in the NFL. You're absolutely right. But how do they know who to talk to, and how do they have that system? You say the NFL is helping. NFL is doing a pretty good job, all right? NBA basketball, the NBA is doing a good job. Major League Baseball doesn't really have anything.
So basically, you're saying, look, the players can't afford this. There's not going to be a lockout. You think they cave? They go to 18 games per season from 16? They cave on this?
I don't know how it all works out in the end, but I will tell you that the group that has the stronger side from a financial standpoint are the billionaires.
All right, I've got 2 investment areas. One of them you love, you like at least. Another one you say run away from. First of all, you like utilities?
Yeah. Right now, let's think about it. Everyone's looking for some sort of yield. We're probably going to see this market pull back a little bit, especially as we go into the earnings season, the beginning of April. Again, we're still going a lot higher. All right, but we're going to see this market pull back. Utilities, you can pick up about a 4.5–5% income, and I think you get a 10% on the growth, 15% total return over the next couple of years.
Well, I was talking about Walmart paying you just under 3% as a dividend yield. You're saying go utilities, and you got 4.5–5%.
I would be buying utilities. I'd overweight utilities right now.
And you said you were running away from something. What's that?
You run away from any bonds that are interest rate sensitive, and that means your AAA rated bonds, your government bonds, and your municipal bonds. And you can even go down to the AA rated bonds. Those are more interest rate sensitive than earnings sensitive. When you get to the lower quality bonds, maybe your CCC, BB bonds, they're more interested in they move based on the earnings.
And you say that because interest rates are going to go up, therefore, that means mathematically, bond prices go down.
They absolutely do. Run away from interest rate sensitive
bonds. All right, Ed Butowsky, let's summarize. There will be no lockout.
No lockout.
Utilities are a good place to be at 4.5–5%.
Buy utilities and run away from your government interest rate sensitive bonds.
You packed all of that into 3.5 minutes. I think that's pretty good. Butowsky, you can come back.
Thank you.
Thank you.